There's some interesting things in terms of a data point. There is a REIT in the marketplace right now that did a gray market private placement with BMO Capital Markets. Tried to vend out 22 buildings. Quite interesting. They did a very closed deal, only went to 20 different parties. We weren't one of them, but we were trying to sniff out the deal. We actually met with them over the last week or two. 22 buildings. The original fair market value on the strike price 8 years ago, was $920 million. They gave guidance at $550. They went to 20 different companies, 15 in Canada, 5 in the US. There was 2 bids, both in America. And the interesting part about it is the 2 bids came in when the dollar was at 70 cents.
Sure.
The dollar went to 74, bids came off the table. So I think Americans have a real hard time because of the facts of demographics, right? I mean, you got as many people that live in the state of California that live in our entire country. So they fly over and look at this massive rock with not a lot of people and don't see a lot of upside. And I went to school in the States, and that is the disposition then, and it is the disposition today. I think you'd probably agree with that, Ali.
It's all about liquidity, right? At the end of the day, we buy or develop to a cap rate, and,
right.
and you're assuming someone's going to buy you at a 4, 5, 6, 7, whatever cap rate justifies your yield. And,
right.
and it's difficult to get that comfort in the U.S. Like we said, we went on this road show. The number of people that came out of the woodwork on the road show to support these deals, nobody was talking about Nashville. We did 2 deals with Wells Fargo in Nashville. So all of a sudden, big lenders are saying, numbers look good, the dynamic is there. And so you're right, when we look at the Canadian market, if it's 55, 60% levered with some sort of recourse, we factor that in as a cost on our capital. So I'm saying maybe 60% levered, but with the recourse, I'm not walking away from it, so I want equity-like returns into your debt stack.
Right.
Makes it hard to underwrite something when we have other opportunities.
So do you find you like commercial less than multi-residential? Because with multi-residential, you pre-sale, your revenue is pretty well solid. Sure. And you don't have to worry about interest rates moving up while you're developing the way you do with commercial.
Sure.
Because cap rates are going to change if interest rates change.
Sure. I think, and this is our limitation because we're a Florida company, Florida had the similar pre-sale deposit use structure and obviously got smashed in 08 and 09. And I moved to Miami in 05 and secretaries were buying condos, and I should have picked it up when they're saying they have 3 condos and a taxi driver. And so although we like the pre-sale model because your equity screams, right? Like we talked about, 15% equity on with you deposits and debt. It's somewhat volatile too because
well, it's interesting because in Canada, Toronto actually has by far the highest deposit levels
sure.
in Canada, which is almost counterintuitive because it's probably the most developed, along with Vancouver, as a condominium market. But it's 20 to 25% cash deposits. Vancouver's close at probably 15 and normally 20. Alberta's 10, and it was 5.
Sure.
So we never went to high-rise condominiums in Alberta because we could not get comfortable with the amount of deposit. It's
also
pretty hard to walk away from a 20
as well that way too, right?
Your yield looked terrific, but you didn't really know if people were going to close till
sure.
the day
sure.
of closing. Whereas if they've put down 25% cash or even 20% cash, that's a big loss for them not to close.
Sure.
And they're more than likely going to get bank financing. If you're only putting down 5%, you're not quite sure how that purchaser is going to finance the other 95%.
Sure.